Good afternoon, everyone, and welcome to this event of Nordic Battle of Treasury, a recurring event hosted by PwC Denmark. My name is Thomas Leth Jensen, and I'm working with Treasury and come with a background from corporate treasury. My focus is on operations and development of the treasury functions through an analytical and digital approach. And by my side today, I have my colleague David.
Hi, I'm David. I'm a colleague of Thomas in the advisory division, and I'm helping financial institutions meet the requirements of the AML regulation, as well as manage their risks for money laundering through their books. I focus on how technology can support you in your journey of financial crime risk management.
Now, the concept of Nordic Battle of Treasury is to create a platform that gives you a better understanding of the technological opportunities that can solve your business challenges. And today we are really excited by having 4 vendors to cover the topic of anti-money laundering compliance. Before we go and give you a background on the topic, I would like to give you some practical information. We have a tight schedule as always, and to ensure an effective outcome for everyone. Hence, each of the 4 selected vendors will have 10 minutes to showcase their approach, followed by 5 minutes Q&A. I'll try to politely interrupt when the 10 minutes have passed, if and as required. You, the audience, can ask questions via the bar at the bottom of the screen, and we highly encourage you to do that. David and I will handle the questions and try to prioritize them. And if you do not get a direct answer during the presentation or this webinar, we will make sure that we'll follow up with you afterwards. And on a final practical note, we will share the material to everyone after the webinar as well. Well, David, could you please introduce some background for today's topic of AML compliance, which is home for some staggering numbers, I have to say, as they account for more than 3 employees in larger corporates with that is actually working with AML compliance. In 2021, AML fines reached $2 billion for banks and financial institutions, and dirty money laundering encountered a number of $3 trillion per year. Staggering numbers.
Right, so these numbers are, as you say, staggering. And for the area where we come from, which is financial institutions, this is understood as business as usual because this was a legal requirement as well as a risk exposure. Financial institutions have invested quite heavily on maturing their processes, supporting investing in supporting technologies and services, refining their requirements so they can meet their operational landscape, specializing their workforce. There's a lot of people out there that are specialists, well-versed into the areas of AML, and they have had to deal with a lot of the headaches that come with it, such as different data sources and different qualities of data. So what we're going to do today is we're going to try to bring that experience from the financial industry to the corporate world, where basically non-financial large corporates, where you can take some takeaways from it. And we're bringing the technology perspective for your enjoyment. So what is AML and why is it relevant? Well, AML, depending on, I come from the financial services, so this is, as I said before, is a requirement. Everybody has to meet certain either EU directives or any other legislation, but for corporates that you might not have such a intricate legal requirement, it's also a way of making sure that you make safe business. You don't want to get your nose into something that might hit your reputation, or you don't want to have some investments that at the end you need to divest. As you may see in this presentation, we interchangeably talk about anti-money laundering and sanctions, and you might think, wait, why are you guys doing this? This is not the same regime. And you are right, it's not the same sort of requirements, but you use the same procedures and controls to manage the risk of both. From a more practical perspective, we've got that layer of requirements, and that has huge operational implications. It's very easy to say, you should be knowing who your clients are and how they look like, but how do you make sure that happens on an ongoing basis in a good quality, level of quality? And this is getting even worse and worse with recent political updates. I mean, beginning with the trade wars, and now you cannot invest in few sectors or few industries. And also obviously the war from Putin in Ukraine is really delimiting what you can do, which in total, it kind of increases the cost of compliance. You also have to answer a lot of banks when they ask you some questions. You have some transactions that back in the days were business as usual with all your reach across the globe, and suddenly you need to, drill down on who's behind those transactions, what is the economic rationale of those transactions, and is there anything they should be worried about? So yeah, it's a multidimensional area, and as we were saying, you need to have a lot of support from operations, technology, people, and information to go about these things. So what we're going to do is we're going to pick few of the main vendors in the space. There's more out there, but we're just getting a sample, and we're going to be picking up a few of the main themes and topics that are relevant for you, and they become a food for thought.
Okay, so thank you for that introduction to the topic here, David, and I think it goes without saying that the degree to which these areas will vary in your organization will of course depend on your risk exposure, the legal requirements you're facing, the characteristics of your business, and of course your available resources. We're going to focus today's Nordic Battle of Treasury on how technology vendors can support you in your AML and sanction screening and risk management. And these are good examples of this tech landscape, as David also alluded to. It's part of the landscape. It's not a complete picture, but it's part of it. Now, the collection of appropriate and up-to-date data for Treasury should be done in a fast and simple manner. And in this webinar, we want to learn how the vendors can assist you on the local or global scale, and with or without the support of third-party data to enrich the service. Now, enough talking from our side. We'll now invite the vendors on stage. And the order of presentation today will be Dow Jones, SIX, Avalon, and Moody's. And we will start with Dow Jones and the first presenter. And here we can welcome Alex and Marianne to the stage.
Welcome, Alex.
So, welcome.
And Marianne.
Hi, everyone. Can you hear me okay? Just testing the connection. Hello?
Yes, we can hear you, Axel.
Okay, great. Thank you for that. Sorry, you should be able to see the slide that says Dow Jones Risk and Compliance now as well. Is that correct? Testing everything should work as well?
Yes, we can.
Super. Okay, thanks everyone for joining today. We have the timer on, so we'll aim to finish within the 10 minutes that we've been allotted, and that should not be a problem. So for the people who may or may not be aware of Dow Jones, by way of a quick introduction, obviously the Dow Jones is a global organization, sort of a globally recognized brand, and the risk and compliance business is a separate business within that broader organization that has been around for over 20 years. So I think that's sort of a unique differentiator in this space. And my name is Marianne Hallis. I'm based in London, and I work in that risk and compliance business as a specialist, supporting customers in their implementations of AML solutions, anti-corruption, and the other topics of compliance that we cover. So to give everyone a bit of a background on the risk and compliance business from Dow Jones, as I mentioned, we started over 20 years ago, and it was because of AML, because of the new sort of requirements of PEP screening and the changing AML landscape and new PEP regulations. A group of investment banks came to Dow Jones and asked us to create the first list or database of politically exposed persons. So they recognized our strength and integrity as a content provider, and that's really where the risk and compliance business was born. So we've got over 20 years of experience in terms of creating quality, accurate data for AML screening, sanction screening, and so on. Now, data is one strand of how we support customers. And we have data produced by our global editorial team, full-time Dow Jones professional researchers based all over the globe, covering sanctions, covering politically exposed persons, adverse media, corruption, AML, and different categories of risk. In addition to data, we also provide technology to enable clients to access that data for various processes and various requirements. And the technology includes screening tools, the ability to monitor names against sanctions and AML risk, as well as a workflow platform, and quite relevant for Treasury, integration capabilities through APIs and so on. And we'll talk about that to automate the screening of payments. And then in addition to that, we have a services sort of strand of our business, which is comprises of a number of different things. So training services, allowing not only Treasury departments, but broader populations of the organization to receive and be certified in training around AML, training around sanctions, anti-corruption and so on, and make sure they're up to speed with the policies of the company, as well as enhanced due diligence reports. So for further investigations into cases that might require additional research. And the managed services to actually carry out the screening or false positive review from transaction screening, from transaction monitoring that may be generated in sort of a high volume screening environment. So quite a broad set of areas we can support customers in, and we'll focus on AML sanctions and how we work with Treasury and what we do to support there. Now, to drill down on the data sets that we produce, which is really the core of everything we do here. So over the last 20 years or so, we've been expanding the categories of risks that we cover. So starting with politically exposed persons, because of AML, we also build out and identify the relatives and close associates of those PEPs. Because under AML legislation, obviously, you don't only need to identify a PEP, but any sort of relationship. It varies country to country and region by region, but it might be the immediate family, it might be the extended family, or it might be business associates of PEPs that also need to be identified. We also cover sanctions. So we have a process in place where we monitor and update all of the sanctions lists across the globe. And as far as we know, Dow Jones is the only content provider that actually has an external audit and review of our sanctions data on an annual basis, which is done by a Big Four consultancy. We've been doing it for the last 11 years or so, and it gives our clients the assurance that if they're screening their payments against our sanctions data, they can be 100% assured that there's no errors in that data, it's complete, it's accurate, and it's up to date. We will also talk about sanctions control and ownership, again, which is a unique data set that Dow Jones sort of pioneered back in 2014 with the annexation of Crimea as the catalyst for that, because again, very relevant to Treasury and payment screening. We then also have what we call special interest persons, which is essentially people involved in negative news. So people who have been arrested, charged, and convicted of different categories of crime. And that watch list data set is very much our core anti-money laundering data set that institutions would implement, when they're looking at mitigating AML risk in various screening processes. We then also have additional optional data sets, state-owned and state-controlled companies. We've identified very much for anti-corruption reasons, to help customers identify if there's government touch points with agents, introducers, or other third parties that they're dealing with, and adverse media entities looking at companies involved in negative news. Now, to drill down on that, if we take a closer look at sanctions, and this is a very important piece, obviously, because AML comprises KYC, counter-terrorist financing, and sanctions are a big part of AML programs for that reason. And especially the way we work with Treasury, when the discussion is always around payments, it will be sanctions data that Treasury departments screen payments against, because that's what you would legally be obligated to stop a payment. You might be making a payment to a PEP, but there's no regulation that says, look, you've got to stop that payment and you can't put that payment through. But if that person appears on a sanction list, or that company appears on a sanction list, then that's when those sort of black and white indicators of having to take action are in place. And what we see more and more is corporate customers using our data to screen their outgoing payments, because the bank's going to screen it anyway. And if there's going to be an issue with that payment and the bank stops it, it takes a lot of time, it costs a lot of money to resolve that, to potentially release that payment. So we're seeing more and more that corporate customers, by integrating our data into their Treasury or payment systems, are screening those payments before they're sent out and processed through the bank. And so the sanctions data we have covers, all of the sanctions lists from across the globe. So OFAC, EU, MAS from Singapore, UN, and so on. And we've got, a very thorough process in place in terms of list management to create this sanctions data and keep it up to date. And that's, again, going back to our global editorial team. So there's really three things we do with sanctions data. We consolidate it, we normalize it, and we enrich it. And that's very critical for effective sanctions screening, because quite often the regulator does not provide a lot of information. There'll be limited information on the list, and we will proactively add attributes and identifiers that can be used as part of, let's say, a payment screening process, and to make sure that the true matches are highlighted and false positives or false matches are not raised because of incomplete data. We have a team that actually is based all over the globe, and an interesting thing that external audit of our sanctions data proves is so in the last year, obviously, sanctions has been a big discussion because of the increasing sanctions against Russia because of Ukraine, and not only from the EU or the US, but globally. And the stats we keep sort of confirm and indicate that, the height of those sanctions in March, when there was about 3,000 changes to just the OFAC, EU, UN, and HMT lists, and that's new names being added, names being removed, and sort of changes to existing names, we were able to meet the timeframes we have for delivering that data to our customers. So we do work to an SLA, and that was met, and that SLA is less than a day, and we can talk about that in more detail if that would be of interest. The other element we have, which Treasury departments have been very interested in, is also screening payments against what we call sanctions control and ownership. So this is data produced by Dow Jones through various sources, company registers, stock exchanges, annual reports, and so on, where once an entity or a person is sanctioned, we research to identify the companies connected to them. This is obviously, to allow our customers to also comply to the guidance from regulators around ownership or control. So we identify and profile companies which are 10% or more owned by OFAC, EU, or UK sanctioned subjects, as well as any company, that has no shares held by sanctioned subject, but they've got, according to the EU, a person in a position of control, which could be a board member, a director, a CEO, or someone like that. And an interesting stat is that, there's over 33,000 companies we found now that meet this definition, which is more than double the amount of names actually on those sanctions lists. And so the way we deliver this content, just coming up to the time here, is a number of different options customers have to suit their processes best. So we have our online SaaS-based solutions that can be accessed from anywhere to run single screening, as well as ongoing monitoring, batch screening. But in terms of the way we work with Treasury departments and sort of their payment processing teams in the corporate space is very much through our APIs, where they would integrate this data again, into a Treasury system or into a payment system such as SAP or Bottomline, where they will have then the ability to screen outgoing payments and potentially incoming payments in real time against the sanction data we provide to avoid any issues that might exist before that payment gets to the bank. So that's it for me. I hope that was helpful, and we made just the 10 minutes there. So I will stop there, and we can take questions.
Very good, Axel. Thank you so much. First question. So, this is typically set up in financial institutions in, screening for payments and counterparties, et cetera. But in your opinion, is there any big difference between Treasury departments? What are the major differences you see in that space, and what are the major sort of capabilities you can bring from one place to another?
Yeah, very much. So I think the difference we're seeing is with Treasury, as we sort of alluded to in the slides, the focus is very much sanctions. So there's a broad range of data and services and technology we can provide, depending on the requirement. So if it's a financial institution screening their retail customers, they have to screen those names against PEP data as well as sanctions data. And from a reputational point of view, they would screen those individuals, or at least the high-risk ones, against adverse media. But with Treasury, it's very much sanctions focused because, again, the idea is, you want to, or Treasury departments want to ensure that the payments they're making aren't in breach of any sort of legal requirements or legal implications. Now, you could argue that, well, why don't we screen typically, a payment for adverse media. And the reason we don't see Treasury departments doing that is because, what if you're sending a payment to Google? What if you're sending a payment to Schlumberger? There's so many companies with different levels of adverse media. When you're onboarding them as a customer or a supplier, you can take that into consideration and map that to your internal policies and maybe put additional contractual terms in place or something like that. But once they're already a customer or a supplier, they've been through that process. And for treasuries, the real key thing is to say, well, look, the sanctions changed yesterday. The payments that we're making, are we sure they're not going to breach sanctions? So that's what we see when it comes to Treasury. It's really the sanctions screening they implement, because that's legally what the obligation is. And typically the relationships that are making those payments or receiving those payments would have gone through some sort of vetting process through the compliance department to be able to have that relationship with the corporate, that they're putting payments through to them.
Gotcha. Thank you, Axel. I think we have time for one more question. So you guys are also running managed services. So from a volume and resource perspective, do you see a big difference between a medium-sized financial institution and a treasury department, like in terms of volume of cases and searches? Do you see a major difference, or kind of the same, or what is your take on that?
Excellent question. So it really depends on the nature of that operation. So with managed services, a lot of the work that we're doing is around transaction screening and transaction monitoring, where we're reviewing, the alerts that are generated through the systems that the corporate entities have. Now, we could have a large corporate, where actually the amount of payments they're making is not that significant compared to, let's say, a payment processor like a PSP, who is constantly putting through thousands of payments or transactions that are then screened and generating alerts. So we find actually in the corporate space, in treasury departments, the workload that we're asked to undertake typically is lower, because the treasury departments, again, from experience in the corporate space, what they've done is they've typically taken an approach to say, well, look, we're actually not going to screen all our payments. Maybe we screen our international payments first, or a certain category of payments. And that's kind of where they start. Whereas in the financial space, or fintechs or PSPs, they're processing large volumes of transactions, all of them being screened, much smaller companies, but they're generating a lot more work because of the nature of the transactions they're doing and they're processing. So with corporates, we very much find that it's actually something that we do assist with them, because they don't have the resources to do it, but we're able to provide that very efficiently and very effectively through our managed services team.
Do we have time for one more? Yeah, so there's a question from the public about ownership of entities.
Yes.
And I think the question is, from what source do you get ownership information? Are you providing that data yourself, or are you getting it from somewhere else?
We are. Everything we do, we're a data provider first and foremost. And we can spend an hour on this, but we have an editorial team. There's over 450 researchers. And so the sanctions control and ownership information we talked about, for example, or other ownership information. So when it comes to screening, it's sanctions related data we'll provide, because guidance is around the majority ownership coming from OFAC. The EU published similar guidance a number of months ago, and the element of control. So you can't find that in a single location. So we use company registers, we use stock exchanges, we use company annual reports, business gazettes, credible media sources. So it really is a cross-referencing of multiple sources to find and confirm and deliver that information as it leads to sanctions.
Thank you very much. That was right on spot.
All right. Well, thank you very much. Now we would like to welcome our second presenter, which is Six. And Oliver, the floor is yours.
Yes, hello everybody. Can you hear me, and can you see the starting slide here?
Yes, we can.
Yeah. So hi, welcome everybody. It's a pleasure to be here at PwC. I'm connecting here from Zurich, Switzerland. I'm working for Six, where I'm working as a senior product manager. So who is Six? Six is the Swiss Infrastructure Exchange. we are owned by the Swiss banks, right? So we mainly run the Swiss stock exchange. Recently, we acquired also the Spanish stock exchange to have the access to the European market. We run a worldwide custody business, and we also have a financial information business. And we're in the business for over 90 years. And the service that I'm going to talk about is our sanctioned securities monitoring service. That is rather unique because it's linking the sanction list to publicly traded securities. So we have it seen before. Now I'm seeing if the slide is moving here. So the animation of the slide doesn't seem to be working here. Yes, it is, of course. So what we have been hearing before from Dow Jones is the positioning of the KYC, AML, and sanction processes. So when we position our service, we always say in that area of KYC and AML, where you're scanning your customer base and your transactions for specific statuses, whether your clients are sanctioned or have a politically exposed status, etc. This is not really the business where SIX is currently providing our services. What we are doing, we're like saddling the horse from behind, right? So we're trying to link the persons on the sanctioned list to their involvement into securities. For an example here, there might be a sanctioned oligarch out there. This person is owning a car shop in the supermarket, and none of these supermarkets or car shops are involved into issuing stock on lit exchanges. Then this is something that won't be in our service. And we have been here in the business of that service since 2014, since the Crimea situation, when the regulation mainly was prohibiting the purchase or to invest into newly issued debt securities that would help to finance the war back in the day into Crimea. And we have been in that business ever since. So on that journey, we mainly have been facing since 2014 rather large sanctions events. There were, of course, it was mentioned before as well, the oligarch sanctions, where everything about ownership and control needed to be analyzed. And there, the other big sanction then was the whole sanctioning against China, especially also with the Chinese military companies. And now we are fully here also providing the services for the latest sanctions here now in the Ukraine context. And this has become more difficult than ever, because just we have seen it in the Ukraine context there, how fast these sanctions have been coming, like all the time, like each week there was a new regulation coming out, and we have heard from our clients that they were struggling to keep up to speed with all these new regulations. The underlying concept that we are using at SIX is that we try to bring these sanctions into a form that the regulators become comparable. So for this, we have developed a rather proprietary a matrix. So in the vertical lines, I don't know if you can see this, there are all the regulators that we are currently following. So the regulators that are somehow issuing these sanction lists. So there we have conflicting views or different views also from the regulators. For instance, the Chinese military sanctions have only been issued by the Office of Foreign Asset Control. The European Union, Switzerland, the UN, etc. did not follow these regulations. So whenever we have a dot here in this matrix, we have somehow an overlap. And this is very important for our clients, because our clients are active in different markets, and according to the profile of clients that they are serving, and in function of the areas of where they are doing business, they might have another compliance profile. And therefore, such a matrix makes sense, because then the sanctions become comparable. And how we are doing this is again, so in the end of the day, or at the beginning, there's always the sanction list, right? So the sanction lists that are issued by the regulators, so you can download them from the internet. Some of them are rather easy downloadable and normalized. Other countries like Japan use Excel, so there you need to run some AI over these. Then we have experts that are somehow reading these sanction lists, right? So we have then automated processes that are loading these sanction lists into this matrix. Of course, with each name on that list, there comes a underlying business rule that needs to be defined, right? So in the very easy case that there is a company listed, then this company comes directly onto the list. A little bit more complicated case that I can show then later. In case there is a person on such list, I need to consider ownership control in order to identify the company that is issuing stocks. Or it can also be that we have domicile sanctions, like we have seen it in the latest sanctions here in the Ukraine conflict with the Donbass region, where the regulators tell us that you cannot do business with the Donbass region, which is Ukrainian territory, but controlled by Russia. So you need to find some way to identify the companies there, and also in order then to list them on your list. So this is everything that is somehow SIX doing. We're normalizing this, and then as a data vendor, we're pushing our lists down to the clients. And what is also important here, so we're doing this not on a case-per-case basis, right? So we're trying to do this as a big data exercise. So here's like many older data points that we are using. So we have over 375 million companies in our database, and they are linked to the beneficial owners of these companies. So in case there is a sanctioned person that is popping up on a list, there's a big likelihood in case this person is involved into some companies that we have this in our database, so we can then link this to the 375 million companies. And as I said before, right, we're only interested in the ones that are issuing issuing stock on the financial markets. So this brings it then down to the 65,000 companies. And once we have this company, then we have automatically all the financial instruments that are in connection to them. And this is also a very dynamic market, right? There is new financial instruments that are being issued. There is ownership changes. There is delistings. There is new sanction programs coming. So we're doing this in a step, with some proprietary algorithms. But then in the second way, we have some BPO teams that are working on these complex cases, that are really reviewing them with 4I principles. Because what we have seen, since we're doing this now like almost for 10 years here, we do want to avoid false positives, because once something gets blocked, or especially a stock gets blocked that is traded on a financial market, there can be a rather large damage, also considering that the price might drop, etc. But I mean, there we have the experience to avoid this. We have the checks and balances in place, that we double check all the important exchanges to be able to deliver a good service here. Just one example that I want to mention here, and what we are also doing is we somehow are doing all the investigation. We are flattening out the data for you. So here is an example with an oligarch that is popping up on a sanction list. So sanctioned person here for this KYC business. Of course, this would mean for you can't do any business with that person. So this person then is control or owns the holding company, right? Not issuing any stocks. The same thing there with this holding company, you can't do anything. Then the way down here, everything that is white down to less than 50%. So this is clean. But then again, this holding company is then owning two sister companies to more than 50%, of course, also tainted. And in case these sister companies are holding each a stake of 35% into a third level company that is then effectively issuing the stocks, right? And according to the OFAC,
sorry for butting in, but just want to remind you, you have 1 minute to go.
Yeah, so then everything would also be sanctioned. So we put this then on our list and push this directly out to the clients. So obviously we are doing now here a human readable service, right, with all the data points that you can have. So you can read this then in a human readable form, in a CSV, XML, or Excel file. So everything there is multi-format. And what we're also giving you, we are giving you mainly a computer-generated narrative. So of each of the instrument that we're there assessing, we give you whether this is really a sanctioned instrument that you can't trade anymore, or it could also be that this is a grandfathered instrument that had been issued prior to a sanction effective date that you can still trade, but you may want to consider capital increases, or if it's a money market instrument that you also can still trade. So this is mainly it. This is our offering, right? So you can pick and choose out of the regulators that you want. We can set you up with such a data service. The data service is rather straightforward. This can easily be integrated in any compliance system or in any a trading system. And yes, we have been doing this for some while, and this is also because we have some awards here for most innovative solution. Okay, thank you very much. And then over to questions.
Yes, thank you, Oliver. So what challenges do you see in these kind of constant changing environment of sanctions, especially for capital market participants?
Yeah, I think for capital market participants, the challenge is always, at first, you need to bring all these data, you need to source all the data, right? In order to identify these controller relationship and the ownership relationships. I mean, what we are doing here in the capital markets, I would say, is AML and KYC on steroids, right? I mean, so whatever you are doing in your classical KYC AML, you just need to gear up another gear, right? I mean, there is, of course, you cannot do business with these entities that you have identified. But on the other hand, then there is additional rule sets that kick in, right? I mean, so whether is it only ruble denominated bonds, is it 50% rules, is something possible to be traded after a certain issuing date, or even like we have seen in the CMIC regulation, I mean, there can also be tainted funds, right, and tainted structured products, right? So there can be an instrument out there that is issued by an unsanctioned issuer, like an ETF, that may contain a lot of sanctioned instruments. And at one point you could say then that this is somehow incompliant because it is written in the regulation, but also you're investing to make money, right? And in case you have a ETF that is full with sanctioned instruments, and these sanctioned instruments become illiquid, the price of the ETF will drop. So you might want to invest probably in another ETF that is not tainted, where the price will not be dragged down due to components are being sanctioned that are becoming illiquid.
Great, Oliver. Thank you so much for your very deep insight.
Yeah, thanks a lot, Oliver, for bringing the investment side into play. And now we will move on to our third presentation today, which is done by Anders Meinertz and Lars Mørk from Avalon. Anders and Lars, the floor is yours.
Perfect. Is everything working?
Yes,
I should
it's going great.
Yes, perfect. So let's just move over the disclaimer here and go here. So thank you so much for having us and giving us the opportunity to present here today. My name is Anders, and I am the CEO and co-founder of Avalon. And usually we would actually prefer to do live demos. There's nothing more than showing the product live. But obviously today we're gonna show some slides. So very quickly, just introducing the Avalon team. So we have not been around for 20 plus years or anything like that. We are a tech startup, 3 years old, mainly based out of Denmark. You could say we cater for two types of customers. One is large corporates, so any type of industrial company, logistics, shipping, whatever you have. And the other type of customers we cater for are funds, so real estate funds, infrastructural funds, private equity funds. In terms of presenting the team, I think I'm going to be modest and just present myself. I have a dark past in banking, 21 years in banking, predominantly at that time corporate banking, and then the last 7 years the even darker side of banking, compliance, anti-money laundering, and counter-terrorist financing. So heading up compliance teams across large banks in the Nordics. So you could say I've been part of creating the pain point for corporates, and now we're trying to solve it through technology. So what is Avalon doing? And I'm going to jump a little bit in the slides also to be mindful of time. But when you're looking at this slide, I think it explains in a fairly okay way how we see the complexity. So you should think about Avalon as the workflow tool inside you as a corporate, where you can use this tool to both respond to KYC requests as well as collect KYC. And both these processes are surprisingly analog and surprisingly manual if you consider for how many years we've been doing KYC. Now, the first part, the response side, is very often where you, as a corporate, have to share KYC with especially the banks. And you kind of more or less share the same over and over again in emails. And thereby, it's a lot of repetitive work. We also see, though, increasingly that other types of counterparties than banks are requesting KYC. So that would be law firms, accountants, it could be investors, authorities. So it's as if everyone has started to perform KYC on each other or due diligence each other. This also means that when you as a corporate have a customer, they perceive you as a vendor and they start to collect a KYC for you as a vendor. Also in order to perform the sanction screening that has already been discussed here today. The other thing is that if you have a vendor, they see you as a customer and then they also perform KYC on you. So everyone is kind of sending and receiving KYC data these days. So what we're trying to achieve with Avalon is to be that platform in the middle where you as a corporate can hold all of your own KYC data and you can share that to whoever is asking, so thereby pushing through secure link sharing the KYC packages, as well as collect KYC from either investors, customers, vendors, and thereby be able to have that in one platform. And that's actually just what I want to show you real quick on some of the screenshots that we brought today. So I'm going to skip forward again a little bit more. Just to give you a very quick tour. So what you're looking at now, and I realize this is a small slide, but what we have embedded in the platform is a full legal entity overview. And this means that all of the data points you have in the platform can be shared with the banks requesting it. This also means that you can see who are obviously your own ultimate beneficial owners and share these views with the banks, including their documents. So you get in the platform a legal entity management tool as well as a document management tool. So here you see a screenshot from the document management part of the system. Any kind of imaginable document you want to share with a bank, users can upload it. You can also request it across the teams. So this also means that often it's a platform that's used by Treasury teams, legal teams, compliance teams, tax teams, even procurement and sales, a little bit depending on the use case of the system. Now, the company officers, or some would call them directors, is often a major pain point. This is where you're trying to collect passports from your chairman or your CEO, and they are flowing around in insecure emails, and then you're sharing them onwards to the banks. So we've also built a full interface for these directors to upload their own data and documents. There's expiration notice on it, so you don't have to constantly remind people that the utility bill has expired or passports needs to be reissued, but that's done automatically by the platform. The last part about the responding is the questionnaires, and this is really where the largest pain point is on the response side. I guess some of you have tried it, questionnaires with more than 100 questions from a bank. This is like we've seen up to 17 pages in a PDF. And I think slowly you go crazy by sitting and answering the same questions over and over again. So here embedded in the platform is already pre-answered questions by yourself that can be reused from bank to bank, but also across your legal entity structure. Now, this drives obviously efficiencies, especially in Treasury teams, but it actually also drives quality, because coming back to the sanctions problem, especially also these days with the Russia, Belarus, Ukraine situation, it's extremely important for you as a corporate to answer correctly to these questions around sanctions coming from the banks, because you don't want to be caught in giving incorrect or just not enough clarity on this area. So here you can also push from the top of the group already approved answers and actually give kind of your sanctions policy, your sanctions questions. And finally, all of these data points you can share securely with any third party asking. So we're not trying to standardize KYC. We don't see that as an opportunity in the near term. So you can tailor make bespoke KYC packages to the banks or anyone requesting it across your legal entity structure, across your data points. So all of the data is yours to share either through secure link sharing, but you can even print it out if you have a very old school bank asking for that. The other part of the platform, which is the collector, which I think more links into also some of the presentations you've heard today, is the ability to collect KYC from, example, vendors or customers. Here you, and again, we're down in the most unsexy, boring part of financial crime prevention, which is collecting the data, right? Because the problem is, if you don't have strong data, then the sanction screening you're running later on will be inaccurate because the data it's actually sanctioned or is screening on is not up to date. So here you can collect data and documents from your vendors or customers, whoever you're requesting it from. The questionnaires can be bespoke. Everything is on the platform, and the vendor who's answering the questions are coming into a sharing portal and answering and uploading documents. So there's really a high level of flexibility in it. And this is what you're seeing. This is the experience from a vendor or customer that's replying to a request from you. So all of these data points and documents you're getting in, you can work with. And the final slide I want to show you is then once you receive the data, you have this compliance overview where you can approve the mitigation or reject the data points you're receiving. But more importantly, you can then perform your sanction screening on the platform as well. So there's embedded sanction screening on the platform, or if you have a preferred sanction screening provider, you can then export and inject that into whatever tool you would be using. So I think that was in short us. Maybe I'm stopping even a bit short of time, but that's okay. Then there's more time for potential questions.
Yes, Anders, thank you so much. So let's try to take a step back and look at the practical. So let's say I'm a company exposed to USD dollars transactions, and I have a large inflow of payments from third parties. How could Avalon help me with their product?
So if you have a large inflow of payments and you're exposed to sanctioned countries, so I think in general, the maturity we see in corporates is obviously much lower compared to banks. And this is a natural consequence of banks being hammered for years by the regulators, to be quite honest, right? So many of the corporates are obviously not regulated. So I think everything starts with having a sufficient amount of data. So one thing is that if you have high-risk vendors or customers, you need to start to collect more data on them. And this is not done through just looking at public databases, because the data there we find simply inadequate. So you have to go ask your counterparties about the data you need. So if we go into a partnership and we say, yes, we want to work together one way or the other, it's totally okay to say, by the way, now you're going through a KYC process with us and we need to collect certain data points. The reason for that being important is also that if you are in a high-risk industry, you are going to experience that your banks are also more on your back in terms of requesting KYC from you, right? So you will also be under further scrutiny, and thereby you need all of these data points as well in order to share onwards with the banks, in order to keep your financing and cash management lines open. So in general, to answer your question, maybe even more in brief, the Avalon platform is the total KYC platform for you to collect and share KYC across your ecosystem.
Great. That was pretty good. We have a question here. How do you screen for sanctions on the platform? What is your interplay between Avalon and sanction screening?
Yeah, so we've partnered up with a third-party provider, which is called Compliant Vantage, and thereby it's fully embedded on the platform. This means that all of the data points you get in on the platform, you can then screen those using our third-party provider. And the handling of the alerts is done so automatically you get into the Compliant Vantage interface, and then you handle your alerts there, but the results are coming back into the Avalon platform. So thereby you don't have to sit and log in and out, but it's an fully embedded flow between those two platforms. So, and in short, I think this is one of the strengths of tech startups, is that we don't want to build everything ourselves. Sanction screening, like some of our good colleagues here on the call can confirm, is a lifelong achievement. So we want to build what we're good at building, which is the orchestration flow, the experience for the compliance officer or treasury manager, and then we simply take the best third-party providers out there. We've done the same with DocuSign that we partner with up as well. So you can sign, and your counterparties can also sign questionnaires if you need to.
Great. There's some curiosity around what third-party provider you're using. Are you happy to disclose that?
On the sanction screening, it's a Comply Advantage, yes.
Great. And last question. So often banks want KYC information or questions, the typical questionnaire in specific formularies or formats. How do you meet those requirements?
Yeah. So as mentioned, we're not trying to standardize. So it's a lost battle trying to force the banks into a standard. And I know this by hard experience from being in banks, obviously, because risk. So KYC, financial crime prevention, it's not a legal discipline. It's a risk discipline. So that's why there will always be differences. So what we do is we have a master structure of questions and answers where you, as a corporate, answer all the questions once. And then we match up questions and answers, and thereby the platform answers the questions for you. Now, based on the onboarding, the data we have from the start. Now, if there are new questions you haven't answered before, the platform will notify you, answer them once, they're added to the library again, and you can reuse that over and over again with other banks. So it's simply having one place to save and store these answers, and thereby being able to reuse them for efficiency and just lower the frustration with the users.
Great. Thank you, Anders.
Well, thanks a lot, Anders, for a very interesting presentation. And now we'll move on to our last and final presentation for today, which is from Moody's. Mark, welcome to you.
Yeah, hi. So to introduce myself, I'll dive straight in. Hopefully people are still with us after a lot of information. But my name is Mark Wheeler. I'm based in Copenhagen, and I'm responsible for our Copenhagen office, which manages our business in Denmark, Norway, Iceland, and the Baltics. And prior to that, I've led what we've done in our broad compliance solutions business in the same region, and done the same thing in the UK as well. In terms of agenda, if we can just skip on through the slides a couple. Just going to try and look to give a background, one more please, if that's all right. A background of who Moody's are, because they've acquired a lot of businesses, including the one I joined to begin with. What our data looks like and how it differs from what you've heard already today, and then I'll dive in a little bit to the solutions and finish with some Q&A. Next slide, please. So Moody's as a business, Moody's has been in risk management for over 100 years, and they're primarily recognized for credit risk and financial ratings and information. But they also acquired a business called Bureau van Dijk, which is the business I've been working for, and perhaps some of you have heard of Bureau van Dijk and the tools that we have. Bureau van Dijk have been working in financial crime and data-based solutions for over 30 years. And you can see here that what Moody's offer, and through those acquisitions, we're able to offer a very wide range of data and services into different areas of large corporations, and that's what makes up a large part of our customer base. So today we're talking about compliance, but you can see on here that as part of our compliance solutions, we can integrate things like credit and financial risk. We can integrate ESG solutions, and that can be looking at environmental crime. It could be looking at modern slavery and topics like this. And we can also build our compliance solutions in from a very early data management perspective and master data management perspective, which is probably the big differentiator with what you've heard a lot of already today. So quite a holistic approach, and that sort of 360 view of risk management is a big part of what Moody's do, even though we have our individualized solutions in these areas. And next slide. So if I'm starting from the bottom up here, the foundation of what we do is on data, and you can see some of the different types of data there. You've heard a lot about politically exposed persons and sanctions already today. What we specialize in and why we're used by financial institutions and large corporations and the big four and law firms and the majority of international large corporations that make up our customer base is because of the quality of ownership data that we have. And we have that everywhere. So we cover about 425 million companies around the world. And ownership data right up to beneficial owners is where we specialize. We then connect that to things like PEPs and sanctions, to adverse media, and we can combine it with things like environmental, social, governance information, credit risk information, if you should want to do that. When it comes to then solutions that we build on top of that, due diligence or compliance, whether that's, as I say, modern slavery, whether it's anti-bribery and corruption, whether it's sanction screening, are based around that data. And then on top of that, we have teams of analysts, we have teams of industry practice leads and dedicated experts on these certain areas to support. So it's building from data into customized solutions that are specific to your requirements, and then having the advisory function on top to support in how you implement those successfully and build them to last. Next slide. So just this in terms of recognition, so Chartis, I don't know if people know it, but it's an independent assessor of risk-based solutions, and Moody's Analytics is a lead or the leader in this space for Chartis' evaluation for 2022, and going back through the years, you'd probably have seen Bureau van Dijk's name in that solution, and some of the others that have been presented today as well. So just in terms of recognition, where we sit in the market, that's a good place to look. Next slide. So what we're trying to do then is answer the questions of ultimately, who am I doing business with, and what are the risks of doing business with them? That can be any types of third party. If you just keep clicking a little bit here for these to pop up. So that starts from industry leading ownership information. So who is the company, not just the subject company that you're doing business with, but who are the controlling shareholders of that business? Who are the beneficial owners? Who are the directors and managers of that business? Once we've identified all of the names of these entities, we then screen them for a lot of what you've heard about today. So that can be a customized list of sanctions information, whether you just want to look at OFAC, whether you want to look at the EU sanctions lists or many more across the world. We cover everything there. We then have politically exposed persons, again, similar to what everyone else has, and not just the politically exposed persons themselves, but their relatives, their family members, their business associates. And then we have a very large database of adverse media so that you can add in things like fraud or environmental crime or human rights abuses, modern slavery type focuses, anti-bribery or bribery and corruption type focuses. So you can customize in beyond sanctions to give a very specific view of how you see risk on your third parties. And that's ultimately what that means is we can do very time-consuming research in seconds because we can connect this data together internationally for such a large set of companies, as I say, hundreds of millions. So if we skip to the next slide, I can show an example of how that looks. So looking at who I'm doing business with, again, if we just tap space a bit here, we're looking here at a private Norwegian company, and this is how we graphically display ownership to help you understand what's involved. So Salts and Pumps Wastewater at the bottom, owned in Switzerland. That company is owned in the Bahamas and the Virgin Islands and the Cayman Islands. And at the top of that, we then have a sanctioned and politically exposed Russian oligarch behind that. And this is a common challenge you face as a large corporation when you're screening, whether it's thousands of suppliers or thousands of transactions in your treasury function or thousands of customers, whatever it might be. The more you have to do of that, the more time consuming the research. And we can hopefully give you this picture very quickly and tell you, you search Salts and Pumps Wastewater and we'll tell you what's behind that organization and what links to high-risk information that they might have or not have in that regard. So it's about the input of which names you screen, not just what lists and so on you screen them against. And it's combining those two things that gives this a slightly different approach. Next slide, please. So then when we're coming to analyze that risk, we're producing profiles that cover, similar data sets to what you've talked about today. These profiles are curated, and by curated, that means that analysts have looked through lots of material, the different sanctions lists for so on. They've combined it into one consolidated profile so that when you get these name matches for potential hits or potential sanctions or adverse media, you see everything in one place. and that helps you to go through the information, understand more about the individuals you're screening and whether they're genuine matches or false positives, but also what the specific risks are of doing business with these types of individuals. So you get these consolidated lists, which make it very easy for you to do the work. If we're moving forward from there, we also have, again, the data set that we're using for combining this has been around since 9/11. It was formed as a result of that as a counter action to terrorist financing originally by a number of US banks. And that's then transformed into what it is today. And we've had a service called Analyst Review as part of that. So that for those of you familiar, when you screen tens of thousands of names or whatever it might be, you tend to get an awful lot of flags and alerts, and it's dealing with those alerts with a small team of compliance specialists. Yeah, we can move on a slide, that's fine. When you've only got a small team to deal with such a large amount of information, it can become very time consuming to do that. So all of those decisions have been recorded and now funnel into our artificial intelligence solution that helps us remove obvious false positives from that and make the whole thing more efficient in terms of how you screen with a small head count in your compliance team. If we come on one slide, I think this is really talking to that in order of getting through a whole load of names and bringing it down to the relevant profiles that are specific to your business and not just random names that come from screening a very wide data set. Okay, so we can start to configure that data, and I'll just give you a quick introduction to how we do that. If we come on one slide. So there's two parts to it. So essentially on the left-hand side here, you've got the risk event types. So you can see the different types of risk. That includes things like cybercrime, bribery, money laundering, sanctions, politically exposed persons, all the things that have been mentioned so far. You can then select which categories are relevant, but you can also select which stage of litigation you want to hear about those at. So if you come to adverse media, for example, and you took in everything that was an accusation from a newspaper or a TV channel or a media outlet, you're going to start to cast the net very wide if you're looking at a wide set of crimes, and that becomes ineffective for you because you're filtering through too much noise to see relevant hits. So we can start to configure that down to say we want to see these specific risk types, these specific risk definitions, and at which stage of the litigation process we want to see them. And that means we can configure it so that as you're screening all these names and being very detailed with screening ownership and screening sanctions, PEPs, adverse media, you're only really seeing the hits that are truly relevant to your business and the business area that you're working in. So this is a really powerful part of what we're doing. And to visualize that, if we come on one slide, you can then see we set it out in what we call a grid. And the gray areas in these give different examples of perhaps on the left-hand side there, how a bank might set something up in terms of being very, very thorough, but still removing some of the noise. Whereas how a corporation might set it up by looking at the most relevant risk categories only and keeping it down to a more relevant data set that covers your needs. So we can configure this to a whole range of needs depending on specifically your risk profile or risk tolerance. If we come on one. So the two things I've talked about there then are the entity data and then that grid for risk data and screening, which you've heard a lot about today. The combination of that is very powerful because if we start to look at sanctions, for example, and we start to look at sanctions by extension or the 50% rule or ownership and control or however it's been described or is described to you, it's paramount that you understand the ownership structure in terms of being able to understand flow down sanctions. So if a company is owned more than 50% by a sanctioned individual or company, then the company itself can be sanctioned by extension. And it's the two data sets combined, talking together and working together that allow you to do that. And then what we provide on top of that are software solutions that allow you to build in customized risk assessment, or it might be workflow that include questionnaire-based work should you need it. It could be approval flows or decision flows where you escalate high-risk decisions further in the business. It could be audit trails and ongoing monitoring. So again, we have the software element to build out these solutions for you to something that's very relevant. We come on one. Again, talking more to that, again, very similar to what's just been said, but the risk assessments is a huge part of what our large corporations prioritizing. So be able to take a company name that you're working with, run it through an automated risk engine, and say, okay, this is low risk, this is medium risk, this is high risk. And then based on those risk assessments, we can start to say, okay, escalate that decision to our legal counsel, or this is low risk, it can be auto-approved by the Treasury department or by the supplier risk department automatically on a lower level. And then to have that documentation through the audit trail and the ongoing monitoring to say, in the modern day, or current economic situation where there's a very fluid sanctions environment, we're going to be updating you on that daily, and not just to say this person is now on a sanctions list or not. It's also about this company ownership has changed, and now the ownership has links to sanctions that you might not have picked up if you weren't taking that data first type approach that we're picking up. And the last slide, if we move on, is just to visualize that in terms of how it appears. So you can see here we're looking originally from the subject company, the directors and managers of the business, the beneficial owners, the controlling shareholders, so that path of 50% control. And then coming back to that holistic approach that we talked about earlier, if we just go back into that risk assessment slide, please. The one forward, please, on the slide. Yeah, you can see on the right-hand side here, we can combine it with other data. It might be country risk models. You could start to include credit risk assessments in there. You can include ESG risk assessments in there, and some of the other data sets that we deliver to give you that holistic view of risk should you want to. Or you can strip it back and say, okay, I want sanctions only on the subject company only, or the subject company and the ownership only, and do that kind of more simplified assessment. So you can build in multiple models, some simple, some complex, based on the risk profile for that part of your business. So these are the key things I wanted to cover. I'm not sure how I'm doing on time, but happy to open it up for questions should we need it. Am I right on time? Or?
Mark, well, been a bit over the time, but that doesn't prevent us from having one last question for you. We know that Moody's is in a acquisition journey, and you guys are expanding your already quite round platform. Do you want to talk a little bit about that?
Yeah, so I mean, I'm of Bureau van Dijk. We also acquired a company called RDC, which I would say is more the direct competitor for something like Dow Jones you heard from earlier, where it's just the sort of screening of names and gathering of PEP sanctions, adverse media lists, and so on. So that's a big one. But it's also expanding into areas like cybersecurity. So we've acquired companies there to look into this kind of risk element. The ESG solutions are already quite advanced that the Moody's have, and both to screening or providing ESG assessments on, the 400 million companies we have in the database, but also more detailed assessments on publicly listed companies and larger firms. These are well advanced. And then again, specific to Treasury, I'm sure there's people on the call whose Treasury departments and financial departments are already using our data and services in that function. And we start to see an increasing connection between running a credit risk assessment, but before you extend that line of credit, for example, are there sanctions concerns that we might have? So it's to provide this holistic and 360 view of risk, even if it started out by being specialized in financial crime. So that's a big part of what we're doing, and probably one of the major differences to what you've heard today so far.
All right, thank you so much, Mark. Thank you for a good overview.
And now we have come to an end for the 4 presentations today. So thank you to all the vendors. Thank you for great presentations and great perspectives to the AML compliance.
And we'd like to wrap up with a few considerations after hearing what these good vendors are bringing to the table. One of the few questions is: are these platforms standalone solutions? Do you need to have them in connection with other solutions that you may have already, or how do you approach that risk? Are solutions means to an end, or are they end in themselves? And that is always understanding what are your capabilities within the organization. What is the technologies and tools that you have available today? What is the skill level you have in your organization? Do you have people who could maintain, manage, and develop the tools that you're buying in, or would you have people who understand the outcome of these tools? Even though we're just presenting capabilities and technology advancements, these has to be embedded within the architecture of your operations and your business. So those kind of all-round views of the opportunities you had to see them in the context of your organization.
All right. Well, thank you for joining me here today, David. It's been a pleasure.
Thank you so much for inviting me.
And finally, for the practicalities, as mentioned, the material will be shared with you, the audience. In case you have any questions which have not been answered during the session, we'll reach out to you and make sure you get the appropriate answer. And if you have any questions, then feel free, of course, to ask either David or I for anything. And then finally, I want to do a bit of commercials for our next event, which will be on 1st of March. And there we'll take a look at the interest rate management. Interesting topic, in particular in these times where we have interest having moved up quite significantly in a very short period of time. Having said that, then that leaves just for us to say thank you for today. Thank you for your time and wishing you all a Merry Christmas. It is 1st of December, so take care.
Thank you.